Are you a first-time home buyer considering purchasing a home and looking for a loan program that allows you to put no money down, potentially cover your closing cost, all while having lower credit scores? Well, in today's video, we're going to dive into the USDA loan in more detail. And unlike my normal videos with me going over the loan requirements myself, what I've done is brought in an expert that actually works for the USDA so that he can talk about the pros, the cons of using USDA along with the loan requirements so we can see if USDA is the right loan for you. So let's take this time and introduce Ed Peace. He is one of the, what are we saying your title is, Ed, at USDA?
Yes, I'm a loan and finance analyst on the national office level.
All right. So he is one of the lead, I was going to say financial analyst, one of the lead analysts with USDA, helps market the program, get it out there to potential home buyers, even those lenders that may consider using USDA loans so that they can inform their clients about it, get more information out there because it's a great program. It allows first-time home buyers and potential buyers that have owned home before to get into real estate, little money down, potential low credit scores. There's a lot of pros. So Ed, before we get into that though, let's take a minute here and let you introduce yourself.
Yes, well, thank you, Jeb. Thank you for having me on today. And yes, my name is Ed Peace. I'm a loan and finance analyst on the national office, USDA rural development staff, working remotely from Georgia. And yes, thank you for the opportunity to get the word out about our USDA loans. I've spent 30 plus years with USDA doing marketing of loans and trying to help families and individuals understand and learn about the program. It's very in some realms, it's very little known fact that USDA even has a loan program. So most people think of USDA as having, just meat inspection and all. So when I tell them that we finance homes in rural areas, starts the conversation. Yeah.
You definitely think of agriculture when you think
That's
USDA,
right.
Or at least I do, being from North Carolina originally. But USDA, I mean, a great loan program in many regards. Being here in Southern California, we don't see a lot of USDA loans. I mean, I have a history, 10-year plus of being in the mortgage business, and I never did one USDA loan in my entire career. In fact, at the time I did loans, I didn't even know, again, that USDA did loans. It wasn't until I started educating potential home buyers about different loan programs that I learned about USDA and the benefits that it offers. So let's take a little bit of time here, Ed, and just talk about some of the pros. Before we get into the loan requirements, what are some of the pros of using a USDA loan, say, versus like an FHA loan, for example, right? A lot of people look at FHA and they go, well, I can get in with low credit scores, a 3.5% down payment, higher debt to income ratios. How does USDA, compare, if you will, not directly to FHA, but what are some of the pros if we were considering USDA, some of the benefits we would see in using it?
Right. So we've kind of compared our program to other programs out there. And as far as the no money down, there's no down payment requirement. And the monthly payments, by the time everything's said and done, all of the MI is added to the FHA. USDA does not have MI. We do have a small monthly fee, but by the time everything's said and done, the no money down and the lower monthly payments, USDA comes out on top for the home buyer each time.
Right. So no money down is one of the key benefits. I think a lot of first-time home buyers can see value in not having to put any money down when getting a loan. But one of the things I mentioned at the beginning of the video is potentially having closing costs covered. Now, no other loan program that I'm aware of allows you to actually finance your closing cost into the loan like USDA does allow. Now, obviously, there's a caveat to that, but let's explain to the potential home buyer out there how they would have closing costs covered in a market like we're in at the moment.
Yes. So as long as the house appraises for as much as the loan purchase price plus any typical closing costs like attorney fees, any repairs done to the house, all those can be rolled into the loan under that appraised value and still have no money down.
So an example would be, let's say you have $5,000 in potential closing cost in buying a property, and you're buying a $100,000 property, just for our example here. That means if the property appraises for $105,000, you can essentially a roll your closing cost, that $5,000 on top of the amount you're financing, that 100%, and get it all covered without coming up with any money out of pocket, right?
Absolutely. Absolutely.
Now,
That's the beauty of our program.
now,
Yes.
I know there's a lot of people out there probably watching going, well, in this market, nothing is going to appraise for more than the purchase price just because of where home values are. But I'll tell you, our live stream this past week, we actually had someone come in and make a comment on USDA saying that they were able to roll their entire closing cost into the loan and get it covered. So depending on your market out there, you might see an opportunity where your home does actually appraise for more and have, and the ability to cover that closing cost. So, compare it to a VA loan, for example. Those veterans out there able to get 100% financing, huge benefit for a veteran, but the veterans can't even get the closing costs rolled into their loan. So that's, again, one of the key benefits of using USDA, no money down, and having the option possibly of rolling that closing cost in. Now, obviously, that doesn't come without some requirements. So what are we looking at with regards to credit score? Because the way I understood USDA is that you needed a 640-ish credit score. I say ish because it's not a line in the sand, but it's kind of been a number that I've always associated with USDA. So what credit scores do home buyers need at the moment if they wanted to
for about
consider?
a year? For about a year, we have basically done away with USDA's minimum credit score. So we rely on the prudent underwriting judgment of our lenders to determine the creditworthiness of the applicants. And
okay. So a home buyer could potentially have a 620 credit score and still qualify for USDA?
Absolutely. It's up to that underwriter.
And typically when I think of that, I hear, having what's the right word? Maybe additional assets in the bank, maybe some contributing factors, if you will. That's what I was looking for. Maybe allows a lower credit score, right? So if you have more reserves or you have some other things, maybe that allows your credit score to be a little bit lower than what you typically want to see.
Yes, some compensating factors to that. Absolutely.
Compensating factors. That's what I was looking for, Ed. You should have jumped in there and helped me out. No, so we got credit score. We've got closing costs, down payment. How about income? Is there an income requirement when using USDA?
Yes, there's a maximum income requirement, which is set by USDA, which is typically 115% of the area median income. And those are kind of grouped together. We have information on USDA's website that shows you a chart that from a family of 1 to 4 is a certain income, and then a family of 5 and above is another higher income. For example, I'm more familiar with the incomes in and around Georgia. I was going to pull up my sheet real quick, but I believe it has evaded me.
It's all right. So if you're looking for that, we'll just talk here for a moment. If you can,
yes,
do both at the same time. So
yes.
when they're taking income levels, for example, if you're a family of a husband and wife, for example, you're in that 1 to 4 category. They're taking both incomes. It's not just one person's income, right? So even if you're not on the loan, and someone there is making income, they're using that income as part of the qualification, right? So that
it's 100% of household income. So we do have to consider everyone in the household, all of that income.
So if you have a kid that's at college, lives at home, husband and wife are married, or whatever the situation is, you've got husband, in this case, wife, and then the son as well. Their income is added in as part of that as well.
Well, full-time students that are 18 and older have a little caveat there. So we do not include their income. Only the first $480 of that income is included for a full-time adult student, only because when they get a $480 deduction as an adjustment to that household income, and so it zeroes it out.
Interesting. I had no idea. That's an interesting, little fact there. So, so you do have to add everybody's income up, and then it can't be more than 115% of the area median income. Now, one thing I am going to mention is that, at the beginning of the video, we talked about, being rural. It has to be a rural area. So not all areas are deemed rural. Not all areas have the option to do a USDA loan. Like where I am located in Southern California, you can't do a USDA loan here in Huntington Beach. But if you go a couple hours east to, the desert, if you will. A lot of that area is considered rural. So I know a lot of people out there are probably wondering where you go to get the information to find out if this is even an option for you. So what we'll do is we'll link to a map in the description below where you can type in a property address and actually see if it meets the qualifications for a rural area per the USDA, to see if, that's the first place to start before ever going any further, and to see if that's an option. So
that's right. You can either in that, using that link, you can either type in the address or zoom in on the map if you're looking for in a particular area, and you can zoom in on that map and it'll delineate what area is urban and what area is rural.
Yeah, no, it's interesting because, when you zoom, I've actually done it the opposite way. I've been on that map and zoomed all the way out.
Yeah.
And it's like, it looks like the entire country is, except for just specks on the border of the United States, like, New York. And then you go down to, say, parts of Florida and then California. But like really the middle of the United States is pretty much an open area with regards to being deemed rural and having the option for USDA. So those are the basics. Now let's talk about, can you do investment properties? What are your options? Does it have to be a primary residence that you're going to live in?
Yes, it does have to be the homeowner's primary residence. No second homes are financed in this program.
Okay, so, and you can use this program as many times as you want.
Yes, it's not only for first-time home buyers. So
okay.
if you have already sold a USDA backed house or property, then you can come back at a later time and if you still qualify, obtain another loan for the same purpose.
And just to clarify, you can't have more than one at the same time. So I can't have a USDA loan now and go out and get another one. I have to essentially.
Correct.
Okay. So the first one has to be, either refinanced into a conventional loan or sold or something else, so that you can have the option for USDA again. Now, one of the questions I always get, go ahead, Ed.
Having title is probably the most important thing. So the house does not need to be, it needs to be sold probably.
There you go. Perfect. So one of the most common questions I get, regardless of what loan program I talk about, is, can I turn it into an investment property after a certain period of time? So I buy it as a primary residence. I live in there, say, a year. Does USDA come knocking on your door? Now, maybe this is something you can't even answer. I don't honestly know. At some point in the future, can that be an investment property with a USDA loan? Or is there something that USDA says we don't allow that at all?
After the loan is made, there's no monitoring going on. So to finance the property up front, it need not have any type of income producing features to it that's primarily designed for income producing. So
got it.
So it needs to be primarily residential.
No, understood. And so in just making, short of what he's saying there. So if you live in it as a primary, after a certain period of time, yes, you can make an investment property, but it's, in order to purchase it up front, it has to be your primary home. Now, you did make a point there to mention something about income producing things. So a lot of rural area have things like farms and silos and different things on the property when they're purchased. Me being from, again, Eastern North Carolina, a rural area, a lot of the property out there has old barns and things on it that were once used in farming and different things. So can I get a USDA loan that have these things on it? And if so, what if they bring in income? Is it still considered, a property that USDA would consider or not?
That's a great question. So we realize that those features, those structures will be on rural properties. If they're used for storage only, it's not a problem. Okay. If they're still used for income production, that's probably where the line would be drawn. So
got it. So you can't have any income producing things on the property.
It's something like a hobby garden where a roadside stand is done, childcare within the home, something that the property doesn't have to have certain features for are okay, but it's minimal.
Got it. Okay. Now, lastly, let's talk about types of property. So when I think of rural property, I personally typically think of a single family home. That's what comes to mind. And I would say manufactured housing, or however you want to look at, some people call them mobile homes, depending on where you are in the country, they're classified a little bit differently. But what types of property am I allowed to have? Or what does USA allow me to finance, if you will?
Yeah, that's a great question. Existing or new construction of single family homes, condominiums are allowed, manufactured homes are allowed, new manufactured homes in every state, and we're running a pilot right now in 22 states where existing manufactured homes are allowed up to, I think, as old as 2006
Okay.
manufactured date. So they are looking at trying to make that permanent, but that's only a pilot right now in half the states, pretty much. So
And do those properties need to be on like a permanent foundation or?
yes, they have to
Okay.
be on the. I think FHA has a permanent foundation guide that we have adopted, so they do have to be on a full in-ground concrete foundation for the manufactured homes.
Okay. So two things in there that weren't or that are kind of new to me that I just want to touch on real quick. You mentioned condominiums. So if a condo is deemed, I guess, rural, if it's in a building with other units, that means that unit is essentially able to get financed. Is that right?
Yes, that's right.
Okay. And then lastly, new construction. So let's talk about how new construction works. Say I own a piece of land, Eastern North Carolina, where I grew up, and I want to build a house and have it financed through USDA. Am I allowed to do 100% financing? Is it a construction to permanent? Like, how does that work? Because I think
Yes,
that's key in this market.
it is. So we still have the typical, I'll say, conventional type new construction where the applicant and the lender have the ability to have the construction loan and then obtain permanent financing. And our guaranteed loan can be the permanent financing.
Okay.
But we also have a feature where it's all rolled into one, the construction to permanent loan that you mentioned, where there's one loan closing. So they don't have to go through and pay the expense of two separate loan closings. There's only one. And the beauty of it is the house payments can be rolled into the loan during so that those payments are made during construction so that the home buyer does not have to make rent and the payments on their new home at the same time. So they can choose that option or pay the interest only during the construction period.
Okay.
Um, and so all of that can be rolled into the loan if that appraisal is high enough to do that. There's contingency reserves for cost overruns that can be rolled into the loan, and that payment, the interest only can be rolled in, or the what we call the PITI, the principal, interest, taxes, and insurance payment, can be rolled in there for up to a year, so that the house has enough time to be built before that borrower, the homeowner, actually starts making payments on that house.
No, and I think it's important to note, like I hear you talking about that, Ed, and me even having a lending background, I have questions. But diving, I mean, because I don't think this is the right video to dive into detail about like construction to perm and how that
Okay.
whole process works, just because it is super detailed. But it makes me think that if you're a home buyer out there and you're considering using USDA, you're considering using any program for that matter, FHA, VA, conventional, it doesn't matter. Make sure you're having a conversation with a lender up front, an expert, a professional, because what Ed just talked about, I have a lending background, and even some of the things he mentioned there makes me start to want to ask additional questions, and I consider myself an expert, so to speak. So make sure who you're talking to has the information, knows these programs, like the back of their hand, or is able to get the information so that you're getting accurate information. So you're not going out there just watching our video and saying, hey, listen, I meet the income requirements. My credit score is higher than that. I want to buy a house and use USDA. I'm just going to go start shopping and not do any of the homework up front. Do the homework, get pre-approved, go through the process, make sure you're good to go before you go out there shopping. It'll save you time, heartache,
Absolutely.
emotion, all of the fun stuff that goes along with it. And if you need a lender, I'll put a link in the description below to get you connected to someone there too as well. But Ed, we're coming up on 20 minutes here. Any
Let me
other things you want to add on USDA?
Yeah, thank you. Let me just circle back around to that income question
Yep.
that I was looking for the document. I did find it.
Okay.
So, for example, I got a feeling that it's going to be similar types of incomes for other parts of the country. Not exact, but so, for example, the parts of the Atlanta metro area, the 28 counties that make up the Atlanta metro area, there are still parts of those counties that are rural. And so A family of 1 to 4 can earn up to $99,100. So a single individual can still qualify for this program if they're earning $99,000 or below. A family of 5 and above is $130,000. So that's the Atlanta area. So the more metro area that still has rural areas. But some of the more very rural areas of Georgia, for example, would be family of 1 to 4 being around $92,000, and then a family of 5 and above would be $121,000. So, and there are certain adjustments we can make to these incomes, like child care being paid out, 100% of child care. That's probably the biggest deduction adjustment to lower their actual income below these limits here. So just to kind of give you an idea of the incomes we're talking about.
And Ed, I know there's links where I can link people to search for property. Is there links where people can type in an area and get the median incomes and get that information that you're talking about?
Yes, I'll send that to you, and you can include that as well.
Awesome. So we'll include that in the video. Ed, I appreciate you being here. I think it's great information for any potential first-time home buyers out there, whether they're using USDA or not, just to be informed of the program, to know what their options are. I mean, I think that's the biggest problem, is that many home buyers out there don't understand that they have options. They think that, for example, FHA might be their only option because they're a first-time home buyer, when in fact you've got multiple. There's different opportunities for you depending on, different situations with credit score and income and all that good stuff. So, again, we'll provide some links in the description below. Ed, I appreciate you being here.
Yes, sir.
And if you guys want more information about other types of loan programs, I'll link them around this video. Check them out. But for now, I appreciate you taking the time to be here. Appreciate the support. Hope to see you guys again soon. Have a great day. Bye-bye.